How to use vehicles to save on taxes. Today, guys, we're gonna break down two scenarios because a lot of people think that you can only depreciate vehicles that weigh 6,000 pounds or more. I'm gonna break down the nuances today for those of you that are business owners, wanna be able to write off your earned income, save on taxes, and leverage your vehicles as much as possible. So today, I've got a 2019 Porsche GT3 RS behind me, and then I got my old pickup that I have had since I was 16 years old. I'm gonna break down a couple examples of what I've actually been able to do with this vehicle and what you can do with vehicles when they weigh over 6,000 pounds. Plus, I'm gonna provide you some bonus tax strategies for you to be able to save in your business. So let's get straight into it. What up, everyone? Ben Oberg back with another video. If you're new to my channel, all I do here is spit facts about building wealth, getting out of the modern financial system, creating leverage, saving on taxes, and I even have a community that I created where I provide all of my wealth building partners all under one roof to mentor, provide the strategy, the funds we invest in, the tax strategies we do, the CPAs that help you save money and be able to do all of that. I've included a link in the description, but for now, let's just get started on the taxes. So bonus depreciation, you've got section 179, everybody knows about that, but the big beautiful bill just brought back 100% bonus depreciation. There's too many B's there, oh my God. So what that means is now we are back to that bonus depreciation where we can write off 100% of the purchase price of the vehicle. Now, a nuance that people get caught up in is they go, okay, well, if I have a vehicle that I've bought for $50,000 and I depreciate the whole thing, I just spent $50,000 on a vehicle to save on taxes. That doesn't make sense. And at face value, that wouldn't make sense. So here's how you make sense of it. I have, for example, a 2024 F350. I bought that brand new. Now, in order to qualify for bonus depreciation, the vehicle has to be new to you. It doesn't have to be new, it has to be new to you. For example, this Porsche I bought with like 600 miles on it. It was pre-owned, I got an amazing deal on it. It was new to me, I could depreciate it, okay? The vehicle just has to be new to you. Now, to get bonus depreciation, you must use it at least 50% for business, and it must have a gross vehicle weight rating of over 6,000 pounds. When you bonus depreciate, you gotta make sure that you hit that criteria. You have to use at least 50% of the time for business. It's gotta weigh at least 6,000 pounds. If that happens, here's how you mathematically make sense of it. So let's say you've got a salary, and that salary is $100,000 a year. And you look at new trucks. A lot of people buy G-Wagons, which are obviously much more expensive. You look at new trucks, they're 70, 80, 90, 100 grand. So that F350 I bought that was $100,000 with my $100,000 a year of earned income, for example, allows me to write off all my earned income in that year. So here's a real life example. So take my 2024 F350. I bought that last year and I was able to get bonus depreciation on it because I use it 70 to 80% of the time strictly for business. Now, the unfortunate thing was in 2024, I didn't have 100% bonus depreciation. But again, thanks to the big beautiful bill, 100% bonus depreciation is back. So what does that mean for you guys? All of you that are business owners that bought a vehicle that you use primarily for business that is 6,000 pounds or more in gross vehicle weight rating allows you to get that 100% bonus depreciation. So if you or me and you bought a $100,000 F350 and you were trying to offset your $250,000 a year of earned income, that's the salary that I typically pay myself, it took your $250,000 tax basis down to $150,000 with one single move. The cool thing is that you could have financed that. You didn't have to actually pay cash for it, so you could have financed it. So where your monthly output is maybe $1,200 to $1,400 a month for a truck like that, you're spending $15,000 to $18,000 a year on payments, but you saved $30,000, $40,000 on taxes to the IRS, okay? Now, part two to this is sometimes bonus depreciation doesn't make sense, and I'm gonna give you an example of that. I have another vehicle that I use and I put about 64,000 miles on it in an 18-month period of time. I was averaging about 40,000 miles a year or so in mileage. So you can actually take mileage as well. Sometimes depreciation makes sense, other times mileage makes sense. Now, the third scenario is where you cannot qualify for bonus depreciation. So my GT3 RS, I bought it first of all because it goes up in value. It's a rare spec. I could get into the nuances of that. I've made other videos on that. But I also knew that I could get a form of depreciation. It would not qualify for 179 because it obviously doesn't even weigh 3,000 pounds. But I was able to get standard depreciation and took about just under $30,000 the last year. Now, in this scenario as well, the standard depreciation outweighed the mileage because this is not the kind of car that you put 20, 30,000 miles a year on. So if I did drive 20,000 miles in a year, I could have gotten perhaps a $14,000 mileage credit because of a couple different deductions available with depreciation and write-offs with this car not weighing 6,000 pounds. I was able to get around $29,000 worth of depreciation. And the really cool thing with that is that, again, that outweighed the mileage. You have to do that sort of balance there. Does it make sense to take depreciation? Does it make sense to take mileage? So I went with depreciation, even though I couldn't get accelerated, and I got about $29,000 worth of depreciation. However, if you know cars, you also know that this car's only going up in value every single year. Let me know so far in the comments what you've loved most about this video. If you have any specific questions on depreciation or tax strategies around equipment leasing, vehicles that you have that might qualify, or what things you have to have in place to be able to take advantage of this, let me know in the comments. I'm not a CPA, but this is something I know a little bit about and have personally practiced in my tax returns, personally and in business, so I'll do my best to help. Now, a question that I get asked a lot is about recapture. There's something called recapture, and I've gotten a lot of pessimists in my comments that are like, well, hey man, you can't bonus depreciate because within 5 years, you're gonna have to recapture all of that depreciation, okay? What they're referring to is this. If I take depreciation and I go to sell my vehicle in the next 5 years, it will recapture. I will have to recapture the depreciation I have taken and pay it all back to the IRS. So I've got a simple solution for you. Don't sell your car in the next 5 years. Use this strategy intending to leverage the shit out of it, and don't take the recapture. It's simple, Kevin, okay? So guys, I also promised before I ended this video 2 things. I promised I would do a book giveaway, and secondly, I promised I'd give some other tax strategies that you could look into taking advantage of. So I'm gonna go over those first. One of the strategies is just basic business entity structure. If you're a sole proprietor, you probably shouldn't be, because as a sole proprietor, you pay even more income tax than an employee. You're paying self-employment tax and you're paying income taxes. So you may want to look at some sort of LLC structure, an S Corp, a C Corp, etc. Now, I have tons of CPAs that I work with, which again, those are all inside TCN that would be able to help look at how you're structured and make sure that you're not paying any more taxes than you need to, that you're protected when it comes to investing, and that how money flows to your company personally to you is set up as strategically as possible. The next things you want to look at is if you're a homeowner, for example, and you own a business, you can do things like incorporating the Augusta Rule. There's things where you can use short-term rental strategies. There's so many little nuances to the tax code that you can look into. And when it comes to investments, you want to look at tax-free investing through things like HSAs. You want to avoid retirement accounts as much as possible, because even if you're in a traditional where you can max out $23,000 a year of contributions, you're still going to pay a shit ton of income taxes when you go to collect. If you're in a Roth IRA, well, you don't get any deductions on the contributions and you grow tax-free, but your money is locked away for 40 years. So you want to not lose to inflation, not lose to the hidden cost of time, not lose to taxes, and you want to start taking that income you're earning in your business and keeping it in tax-friendly assets that grow, that hedge inflation, and that allow you to create appreciation. So I keep my money in dividend-paying whole life insurance policies that have 8, 9, 10% rates of return, where I'm getting dividends that are tax-free, and the growth in my policies and cash value far outweighs a high-yield savings account. I'm getting lines of credit. I'm investing in oil. I'm investing in real estate. These are all things you'll find on my channel, so definitely check out a couple other of my videos so you can learn about the different assets that I invest in, how I become my own bank, and all the other tax deductions that I use in business. All right, guys, so book. Before I end the video, I promised I'd give away American Mediocrity. So I've signed a copy for you. I'm picking out one winner. All I want to know is what is the best tax strategy that you learned in this video, or one you weren't aware of that you want to implement. Drop that in the comments. I'm going to pick one winner. I will reply to that comment. I'm going to give you my email at that point. You'll send me your shipping address, and then I will mail you a free signed copy of American Mediocrity, all about taxes, finance, health, wealth, business, marketing. The lessons I've learned as an entrepreneur are all contained in this book. So appreciate you guys. Subscribe if you're brand new. Smash that like button, and I'll see you in the next video.